What would happen to your P&L if, the exact moment you went on tilt and tried to widen your daily drawdown limit, your MT5 terminal instantly rejected it and snapped your settings back to your original trading plan? What if the software you were using literally refused to let you self-sabotage? If you are reading this, I already know exactly who you are, because for years, I was you. I was a perfectly unprofitable trader. I wasn't a total beginner. I could string together a few lucky wins, feel on top of the world, and then, without fail, I would experience a catastrophic, psychological meltdown that ended in an account-blowing loss. I was stuck in a brutal, exhausting loop of making money and donating it right back to the market. Then, in 2023, everything changed. But my breakthrough didn't come from discovering a secret chart pattern, a magical indicator, or some hidden ICT concept. It came through the back door. I got hired as a data analyst at one of the largest prop firms in the industry. For obvious legal reasons and non-disclosure agreements, I can't tell you the name of the firm, though if you've been in this space long enough, you probably know them. But suddenly, I held the keys to the kingdom. I had raw, unrestricted, unfiltered access to the back-end servers. I was staring at the live data of hundreds of thousands of traders. I could see everything. I could see their entries, their drawdowns, their holding times, where they moved their stop losses, and exactly the moment they completely lost their minds and blew their funded accounts. One night, sitting in the dark, staring at these glowing metrics on my monitors, it hit me like a freight train. The exact same psychological traps that were killing my personal accounts were playing out on a massive, global scale across the entire firm. I was watching thousands of people make the exact same mistakes I was making, at the exact same time. But hidden inside that ocean of failures were anomalies. There was a tiny, quiet, almost invisible minority of traders who were consistently pulling massive, five-figure payouts month after month. I dug in. I became obsessed. I wanted to find the exact mathematical, undeniable difference between the 99% who donate their money to the firm and the 1% who extract it. What I found inside those servers contradicted almost everything that trading gurus preach online. I took this classified data and I used it on myself. I dismantled my toxic, impulsive habits and rebuilt my mind using cold, hard evidence from the firm's servers. And it worked. The profitability I had chased in the dark for years was finally real. Now, I'm sliding the playbook to you. I took that raw data and put it into my new book, The Anatomy of Trading Discipline, which serves as the ultimate data-backed psychological blueprint. But knowing the data isn't enough. You have to enforce it. That is why I use a tool called the Alpha Equity Manager for MT5. It is a risk management and trade control terminal designed specifically for manual traders who need their rules strictly enforced. I am going to reveal the patterns I found inside that firm. I won't just hand you data. I'll show you exactly how I fixed my own flaws using this software and how you can do the same. These aren't theories. This is the true anatomy of trading success, pulled straight from the belly of the beast. Pay attention. Here are the first 6 life-changing habits of the 1%, and exactly how to hardwire them into your terminal. Before we get to the habits, you have to accept a bitter truth. Willpower is a complete and utter myth. Most traders fail not because their strategy is bad, but because human psychology violently breaks down when real money is on the line. The grand lie of the trading industry is that you just need more discipline. You are told to read books on stoicism, meditate, and try really hard not to move your stop loss. The server data proves this is garbage. Willpower is a finite resource. When you are staring at a red screen, your heart rate elevates, your amygdala hijacked, and your logical brain shuts down. You cannot rely on your mind to save you when your mind is the very thing under attack. While analyzing the back-end data, 2 unexpected insights completely changed how I view trading. Insight 1. The MT5 interface is your enemy. The default MetaTrader 5 one-click trading panel is not designed for you to be profitable. It is designed for brokers to get you to execute as fast as possible. It removes friction, but in trading, Friction is what saves your life. When you can click a button and instantly risk thousands of dollars without seeing the math, you aren't trading. You are pulling the lever on a slot machine. Insight 2. Winning is just as dangerous as losing. Everyone talks about how to survive a drawdown, but the servers showed me something terrifying. Euphoria from a winning streak creates massive anomalies where traders over-leverage and give everything back in a single hour. Winning makes you feel invincible, which makes you reckless. The 1% do not have superhuman willpower. They simply stop trying to be disciplined, and instead, they mechanize their trading. They place a psychological barrier between their emotions and the market. They use tools to remove their ability to self-sabotage. This is what the Alpha Equity Manager does. It doesn't execute trades for you based on indicators. It sits in the background, actively monitoring your account equity, and takes physical control of your terminal when you try to break your own rules. Habit 1. Cold state. Decision-making. The first habit of the 1% is that they never, ever make decisions about their risk parameters while they are in a trade. In the prop firm data, I saw a recurring nightmare. A trader would set a strict rule. I will only risk 1% today. But then they take a loss. Then another. Suddenly, they are down 1%. What do? Driven by the panic of failing their evaluation, they open their settings, widen their daily drawdown limit to 2%, and double their lot size to try and make it back. The data was absolute. Traders who tweaked their risk parameters while floating red blew their accounts 9.5 times out of 10. Professional traders set their rules in a cold state. When the market is closed, the charts are off, and their minds are completely clear. Once the trading session begins, those rules must be untouchable. To enforce this, Alpha Equity Manager uses a feature called the time-locked vault system. This is the absolute core of the software. It works like this. You define a specific unlock window using the unlock start hour and unlock end hour inputs. For example, you might set it so you can only access the EA's settings between 23 o'clock and midnight. During this 1 hour, you can adjust your max lot sizes, your drawdown limits, and your profit targets. But the second that window closes, the vault locks. If you are in the middle of the New York session, floating in a painful drawdown, and your brain starts screaming at you to widen your daily loss limit so you can take just one more trade, you will try to open the EA settings. You will try to change the input, but the software will simply ignore you. The instant you attempt to change your drawdown or lot limits outside of your defined unlock window, the utility detects the intrusion and instantly reverts the settings back to their locked state. It does this using the terminal's global memory. You can try to cheat it. You can restart your MT5 terminal. You can delete the chart and load a new one. It doesn't matter. The vault survives. Your emotional self is physically forced to obey the rules set by your logical self. Habit 2. The unbreakable walkaway. Revenge trading is the #1 killer of prop firm accounts. Period. When I was analyzing the servers, I noticed a fascinating pattern. The traders who blew their funded accounts didn't slowly bleed out over a month of bad trades. They blew it on a random Tuesday afternoon. They took a normal, acceptable loss in the morning. But their ego couldn't handle it. They took another trade to get back to break even. It lost. Now they are furious. They size up, enter a garbage setup, and within 2 hours, a month of pristine, disciplined trading is entirely wiped out by a single catastrophic session. The 1% of traders have mastered the habit of the walkaway. When they hit their daily loss limit, they shut the screen. They accept the red day and come back tomorrow. But as we established, willpower is a myth. When you are tilted, your brain will physically not allow you to walk away. You need an unbreakable barrier. In Alpha Equity Manager, this is handled by the protection shields. You establish your core account size, the baseline monetary value of your account. Then, you set your input daily drawdown %, your maximum floating daily loss calculated against midnight balance, and your input total drawdown /4CT, your maximum overall floating loss. Once these are set and locked in the vault, The EA watches your equity like a hawk. If your floating loss touches that daily percentage, the EA doesn't send you a cute little push notification warning you to stop. It executes a hostile takeover of your terminal. It instantly, aggressively closes every single open position you have. It wipes the board clean. But it doesn't stop there. It then permanently disables the buy and sell buttons on your execution panel for the remainder of the day. You can click your mouse until your finger bleeds. The terminal will not allow you to route an order to the broker. The habit of walking away is no longer a choice you have to agonize over. It is an enforced, inescapable reality. You are saved from your own destructive impulses. Habit 3. Securing the bag, capping greed. If revenge trading is the #1 killer, greed is a very close #2. Remember the unexpected insight I mentioned earlier? Winning is dangerous. I cannot tell you how many times I looked at the back-end data and saw a trader who was up $3,000 by 10:30 a.m. They had caught a beautiful London breakout. They had won the day. All they had to do was close the laptop and go enjoy their life. But the dopamine hit is too strong. They feel in sync with the market. They think, if I made 3K this morning, I can make 6K by the afternoon. They sit back down during the choppy New York afternoon session, force a trade that isn't there, take a loss, get frustrated, and by 4 p.m., that $3,000 profit has turned into a $500 loss. They literally snatch defeat from the jaws of victory. The 1% habit is knowing when enough is enough. It is the habit of securing the bag. Alpha Equity Manager enforces this through the daily profit cap, input daily profit percent. Just like you set a maximum loss, you set a target daily floating profit. Let's say your goal is 2% for the day. The moment your floating equity touches that 2% milestone, the EA triggers the exact same protocol as the drawdown shield. It instantly closes all of your positions, securing those funds directly into your balance. It then completely disables your execution buttons until the next daily reset at midnight. You are forced to keep your money. You are forced to experience a winning day without the temptation of giving it back. By capping your greed, you slowly hardwire your brain to view trading as a precise, surgical extraction of capital, rather than an all-day casino binge. Habit 4. Total pre-trade clarity. Amateurs trade based on how much money they want to make. Professionals trade based on exactly what they are willing to lose. One of the most glaring differences I saw in the prop firm data was execution speed. The 99% fire blindly. They see a candle moving fast, they panic about missing the move, and they smash the buy button on the default MT5 panel. They don't know exactly what their dollar risk is. They enter the trade, and then they drag their stop loss on the chart, praying the monetary value isn't too painful. This blind execution immediately puts them in a state of anxiety. The 1% never enter a trade without total pre-trade clarity. They know the exact, to-the-penny dollar amount they are risking before their finger ever clicks the mouse. To build this habit, Alpha Equity Manager completely replaces the native execution system with an interactive command center. First, the utility automatically hides the default MT5 one-click trading panels. It routes all of your execution through its own risk filters. Before you can take a trade, you must use the built-in pre-trade calculator. You can toggle the interface to use either pip-based inputs, e.g., entering a 15-pip stop loss, or exact price inputs, e.g., typing in 1.10500. Once you input your desired lot size, stop loss, and take profit, the calculator analyzes the data and displays the exact monetary risk on your screen. You are forced to look at the cold, hard math. If the calculator says you are risking $800 and your brain recoils because that is too much money, you don't take the trade. You adjust the lot size before you are exposed to the market. Once you are comfortable with the math, the command center gives you dedicated buttons for market buy and market sell. It also features advanced management tools: close buys, close sells, close winners, close losers, and a panic close all button. It transforms your screen from a gambling interface into a professional, calculated business terminal. Habit 5. Zero tolerance risk control. If you want to know the biggest lie retail traders tell themselves, it's the concept of the mental stop loss. I've heard it a million times, and I used to say it myself. I don't put a hard stop loss in the market because the broker will hunt it. I just have a line on the chart, and if a candle closes below it, I will manually exit the trade. This is absolute psychological delusion. The server data destroys this myth. In thousands of datasets, I watch traders enter a position without a hard stop loss. The market spikes against them. The price crosses their mental line, but they don't close it. They freeze. They think, it's going to wick back up. I'll just wait for the pullback. The pullback never comes. They hold the toxic position until the margin call triggers, and the prop firm automatically terminates their account. The 1% have a zero-tolerance policy for naked risk. Every single trade has a hard stop loss, placed immediately upon execution. Alpha Equity Manager acts as your enforcer here with a feature I call the stop loss police. When you toggle on Enable SL Enforcer, the software actively monitors your open positions. You define a SL grace period seconds, let's say 30 seconds. The exact moment you open a new trade, a hidden timer begins counting down. You have exactly 30 seconds to manually attach a stop loss to that position. If you drag your feet, if you hesitate, if you try to play games with the market, the timer hits 0. The utility scans the trade, sees there is no stop loss attached, and immediately, mercilessly, closes the unprotected position at market price. It does not care what your analysis is. It does not care if the trade is currently in profit. If you do not protect your downside, the software will protect it for you by kicking you out of the market. After this happens to you once or twice, your brain rapidly builds the habit of establishing risk immediately. Furthermore, the software includes a smart stop loss reduction feature. If toggled on, you can set a trigger PCT and a reduce PCT. For example, if the current price travels 50% of the distance to your take profit, the utility automatically moves your stop loss closer to your entry price by a specific percentage. This reduces your capital risk dynamically, locking down your downside as the trade moves in your favor, completely removing the manual emotional labor of managing the trade. Habit 6. Micromanaging exposure. There is a silent killer in the markets called hidden exposure, and it ruins traders who actually think they are being responsible. I would look at the back-end data of a trader who had strict rules. They only risked 0.5% per trade. They were doing everything right. But then, a high-impact news event would drop, and their account would instantly blow. How? Because I looked at their open positions, and they were long on USD, long on GB/USD, long on AUDist, and short on USD CAD. They looked at their terminal and thought, I have 4 different trades running. I'm diversified. No, you aren't. You just took 4 highly correlated trades against the US dollar. You aren't risking 0.5%. You are risking 2.0% on a single fundamental variable. When the dollar spiked, all 4 trades went into heavy drawdown simultaneously. Diversification is a complete illusion if you do not understand correlation. The 1% of traders don't just manage individual trade risk, they micromanage their holistic portfolio exposure. They never let a single currency dictate the fate of their entire account. Alpha Equity Manager handles this complex mathematics in the background through its overtrading blockers. Yes, it has the standard protections. Input max open positions caps the total number of concurrent trades you can have running, preventing you from revenge clicking a dozen entries. Input max total lot size puts an absolute ceiling on the combined volume of all your buy and sell lots, keeping your leverage in check. But the true lifesaver is the max currency exposure limit. You input the maximum volume you are willing to hold on a single currency, let's say 2 standard lots. If you open a 1-lot buy on USD, you now have 1 lot of USD exposure. If you open a 1-lot sell on USD CAD, you now have 2 lots of USD exposure. You have hit your limit. If you try to open a 3rd trade on GBP/USD, the software's command center will actively block the execution. It calculates the base and quote currencies of the pair you are trying to trade, realizes it will breach your USD exposure limit, and rejects the order. By enforcing this, the software protects you from your own blind spots. It forces you to view the market like an institutional fund manager, managing net exposure rather than just staring at isolated charts, ensuring that no single market swing can ever take you out of the game. Habit 7. Tactical patience. If you want to see what a massacre looks like from the back end of a prop firm server, look at the data during non-farm payrolls, NFP, or a CPI print. Retail traders are absolutely obsessed with high-impact news. They see the massive, violent volatility as an opportunity to make a month's worth of profit in 30 seconds. But from the data analyst's chair, I can tell you exactly what actually happens. It is a bloodbath. During a red folder news event, liquidity evaporates. Spreads widen to absurd levels. Slippage becomes chaotic. A trader might put a stop loss 15 pips away, but because of the massive gap in the order book, the broker fills their stop loss 45 pips away. I watched hundreds of funded accounts instantaneously vaporize at 8:30 a.m. Est on the first Friday of the month after month. Gambling on high-impact news isn't a trading strategy. It is a dopamine addiction. It is the desperate desire for fast money. The 1% of consistently profitable traders do not participate in this circus. They understand that their edge relies on technical structure, and during a major macroeconomic release, technicals go out the window. The 1% have mastered the habit of tactical patience. They sit on their hands, let the amateurs slaughter each other in the volatility, and then they step into the market an hour later to trade the true structural trend once the dust has settled. But again, when that countdown hits zero and the chart starts moving 100 pips a minute, the temptation to jump in is intoxicating. Your willpower will fail you. You will want to click the button. Alpha Equity Manager physically removes your hands from the keyboard using the News Guardian. By toggling on Enable News Filter, the software syncs directly with the native MT5 high-impact economic calendar, with no clunky DLLs required. You, in your cold state, define exactly how wide of a berth you want to give the market using the minutes before news and minutes after news inputs. Let's say you set it to 30 minutes before and 30 minutes after. Exactly half an hour before a red folder event drops, the software executes a lockdown. The command center execution panel is completely disabled. The buttons turn gray. You are entirely restricted from routing new positions to the market. You can watch the chart violently print massive wicks up and down, but you are safely confined behind the software's firewall, physically unable to gamble. Furthermore, if you are a strict day trader, you can toggle on close trades before news. If you are floating in a trade and lose track of time, the EA will automatically close your active positions immediately before the restricted pre-news window begins. It protects you from the nightmare scenario of holding a technical trade into a fundamental explosion, suffering massive slippage, and blowing your evaluation. It forces you to be patient. It forces you to be a professional. Part 4. The conclusion and the playbook. When I finally stepped away from those glowing servers, my entire paradigm had shifted. I realized that my years of failure weren't because I was stupid or because I didn't understand market structure. I failed because I was fighting a war against my own biology, armed with nothing but willpower. The data does not lie. The quiet minority of traders pulling massive payouts are not superhuman. They do not have ironclad emotional control. They simply recognize that human psychology is deeply flawed when real money is on the line, and they use mechanical systems to bridge the gap. I dismantled my toxic habits not by meditating or staring at the mirror telling myself to be disciplined. I did it by building uncheatable fences around my worst impulses. I stopped trusting my brain in the heat of a drawdown, and I outsourced my discipline to the machine. The profitability I had chased in the dark for years only became real when I mechanized my approach. Now, you have a choice. You can keep doing what you are doing. You can keep entering the cycle, passing a challenge, getting funded, feeling invincible, taking a bad loss, widening your stop, revenge trading, blowing the account, and starting all over again. You can keep donating your hard-earned money to the prop firms. Or you can step into the 1%. You can take what is yours. If you are serious about breaking the cycle of self-sabotage, I am sliding the rest of the playbook to you right now. Knowing these 7 habits is only half the battle. Executing them is where the money is made. To do this, you need 2 things: the blueprint and the enforcer. Step 1. The blueprint. Grab a copy of my book, The Anatomy of Trading Discipline. Inside, I don't just give you theories. I give you the raw, classified data I pulled straight from the prop firm's back-end servers. I break down the exact mathematical differences between the winners and the losers. You will discover the practical, step-by-step strategies to completely control fear, greed, and overtrading. I will teach you the exact mindset shifts that consistently profitable traders use to survive the markets. It is clear, easy to read, and packed with lessons you can apply to your very next trade. This book is the ultimate operating system for your mind. Step 2. The enforcer. Once you know the rules, you must lock them in. Download Alpha Equity Manager for your MetaTrader 5 terminal. Take the data-backed parameters you learn in the book, your max daily drawdown, your currency exposure limits, your exact risk-to-reward ratios, and plug them into the software. Then, lock them inside the time-locked vault. Let the software hide the native MT5 panels. Let it calculate your exact dollar risk. Let it act as the stop-loss police and the news guardian. Let it take over when your emotions flare up. Stop treating this profession like a casino. Stop relying on a finite supply of willpower to protect your capital. Get the data. Mechanize your mind. Lock your discipline in the vault. Links to both the book and the Alpha Equity Manager software are in the description below. It's time to stop donating and start extracting. I'll see you on the inside.